Hi everyone, Scott Schweiger back with another Tuesday tax tip. Last week we talked about fixed assets and making sure your business can claim depreciation and accelerated depreciation on those year-end purchases. This week we're talking health insurance. Specifically, the self-employed health insurance deduction. Yes, if you're self-employed, there's a tax provision to deduct your health insurance premiums from your gross income for taxes. Nice, right? It's a pretty straightforward deduction. So let's get into some caveats and pitfalls. If you have a Schedule C or a sole proprietorship, then you take your premiums less any subsidies, such as the premium tax credit, and that's the max amount of your deduction. Now, this is also limited by self-employed income because your self-employed health insurance deduction, it's a mouthful, cannot be any more than your self-employed income. So, limitation there. If you were eligible for group coverage, say from a spouse's plan or your main job, if you are just running a side gig here, then you're disqualified from the deduction. Sorry. If you change jobs during the year, that's okay. You can determine the self-employed premiums on a month-to-month basis. It's pretty nice. Now, what if you're a business that isn't a sole proprietor? Let's start with S-Corps. First, you need to be a greater than 2% shareholder, and you need to have a wage in order to take advantage of your self-employed health insurance deduction. That's a mouthful still. The premiums that you're going to deduct must be included on your W-2. There's no FICA or federal unemployment needed on these wages. And it should clearly be shown in box 14 on your W-2. Now, it's this box 14 amount that you can use for your self-employed health insurance deduction on your individual return. So, what we end up doing here is adding income to you via a wage. The business deducts that, and then you deduct it again on your individual income taxes. So you basically add once, subtract twice to get where we need to go. Not confusing at all, right? Anyway, if you have a partnership, then it's similar to the way the S-Corp works with the add once, deduct twice to get where we need to go. Only there's no wage component. You end up receiving what's called a guaranteed payment instead of a wage. And even though it's a guaranteed payment, air quotes here, doesn't mean it's actually guaranteed. It's just kind of what they call it. And I really want to go into it, but that's a whole nother video. Obviously, how this tip is going to impact you is going to depend on your particular set of facts and circumstances, like if you have a business and if you have self-employed health insurance premiums to deduct on your return. If you have specific questions, feel free to reach out to me or contact your tax advisor. Thank you so much for watching, and join me next week for another Tuesday Tax Tip.